So with Tesla cutting the price of its brand new Model S and Model X vehicles, the value of some used Teslas are taking a hit. We want to bring in Pat Ryan. He's the founder and CEO of CoPilot. That's an app that helps potential car buyers find the best deal. So let's talk about what you are seeing in the used car market right now. How are these price cuts trickling down to the used car market? And that action, what does that signal just in terms of how much more of a hit these vehicles could potentially get this time around?
Well, it's a really hot car market right now. The new market's up 6.5% week over week last week. The used car market's up 7%. So these price cuts are coming into a high demand market, particularly for EVs. On the used side, there aren't that many EVs available. A lot of the EVs that we're looking at are coming in the future. So they're 23, 24. So that's what dominates this market. They have 65% of the used market for EVs and 86% of the luxury market. So when these prices come down, it's great for consumers. The new prices coming down are going to put more and more pressure. The one cautionary note we're telling our members to remember is this. Elon Musk cuts the prices overnight. They immediately drop. You get the benefit of that on the new side. But on the used side, you have car dealers, people who took those cars in on trade, bought them at a wholesale auction. They're slower to drop those cars because they paid a certain price for them. So we've seen there have been a real lag between when the new car market moves and the used car market moves. And that is almost entirely because of dealers' reticence to lower the price and take the hit themselves, which means if you're going to buy a used Tesla, it's good to wait.
That is interesting advice. All right, so Tesla, the first time they made their price cuts, we saw others follow, not all of them uniformly. Do you expect that to happen here? And who is closest to the bumper of Tesla when it comes to used EVs?
There's nobody that close to Tesla. I mean, it's amazing how far ahead they are. They have so much inventory out there, so much brand loyalty. There really is nobody close. But I would say on the new side, you heard Rivian and Polestar both say they're not going to cut prices. Lucid said they'll cut prices, but just for March, if you buy in March. So people are afraid to follow. Your reporter was just describing, I think, exactly right, which is the fact that Tesla basically went through the growing pains of learning how to build EVs efficiently earlier and got through that gives them a margin advantage. They make $9,500 per new Tesla today. They can afford to cut their prices and still be profitable, where their competitors, Ford's already losing money on every EV they sell, and the others will end up with the same situation. So nobody can really do what Tesla's doing. Elon Musk built this competitive advantage. Now he's making the most of it at a time where the competitors are struggling to get new inventory out. In the EV world, they're still playing catch up on that. And now he's giving them another headwind that'll give a tailwind to Tesla sales. The challenge I would say for used buyers is that this has been an incredible 13 months, almost a little over 12 months for Tesla prices. If you look at Tesla stock price, the vehicle prices have been not that different. When the war started in Ukraine last year, gas prices went up and electric prices, especially Tesla prices, took off and went through the roof, peaking in the summer. And they've been going down, pretty much ever since. But what you're really seeing is that there is a delay now between when the new car price drops hit and the used car prices hit the market because of that lag of dealers hoping to sell you cars for what they paid for it, which is why the savvy consumer waits, watches the market, and either buys new now because it is attractive pricing or waits for the used market to get there. Carvana liquidated a lot of them, so there was some inventory there. Not clear how much they have left. And the rest of the dealer world is hoping to get out of those cars without too big a loss, which means that buying now could actually cost you a lot of money, or if you wait 30, 60, 90 days, this price change will really clear through the market. You'll get the benefit then on the used side like you're on the new side today.
All right, Pat, so Tesla aside, let's talk about what else is going on in the used car market, because we certainly had seen prices trending down in the direction that was favorable here to buyers. Some talk, though, that momentum is starting to shift, and we might be seeing an uptick here for the month of February. Is that consistent with what you're seeing? And what do you, expect here for the used car market looking out over the next couple of months, given the fact that the spring is a very popular time in terms of car buying season?
Well, we're in tax buying season right now. The refund checks peaked, I think, a week or two ago. But there's no question that, we've seen the wholesale prices go up. You've seen that in some of the Manheim data. Of course, during the pandemic and even after, we saw wholesale prices go up, I think, 9 times, where retail prices only followed twice. This will be the third time, though, retail prices have followed. We're seeing both big increases in sales, like I said, almost 7% week over week increase in used sales last week. And we're seeing prices go up. Prices went down from pretty much Labor Day all the way through the beginning of February. Retail prices treaded water on used cars during the month of February. But the last 2 weeks, we finally are seeing prices pop back up a little bit. I think the Fed's going to start getting very nervous. It appears that the rate increases they've put in place just haven't had the slowing effect on the used car market the way they expected, or the new car market, which is up 6.5% week over week. So I think we're in a position now where it's really a time to pause, because with the demand that's out there, there's no chance that the Fed isn't watching this. They've watched the used car market and the new car market very carefully, and those markets are heating up again. We're seeing really a strong increase in volume, strong increase in pricing, strong consumer, like you see in the job market, following through in the way it isn't in some other markets. And they have to cool this down. And when they do cool it down, I think you'll see prices start to soften again. But we're not going to see it in the month of March, doesn't look like.
Wow, yeah. JP Morgan has a study out saying they believe 10% they will fall in terms of used car prices this year. Clearly not seeing that yet. Pat Ryan, good to see you, my friend. Thanks so much.
See you.